The broadcast is now starting. All attendees are in listen-only mode.
Can everybody see my screen and hear me? Good evening. Perfect. All right, we'll go ahead and get started. I might mute myself at some point. There's some guys doing a little bit of work here, and I think they're done with all the sawing and drilling, but they just finished, and so there was a little bit of loud background noise. But we'll try and avoid that and get our webinar underway. All right, so looking at our larger structure again, I mean, actually, it has been a little while since we have zoomed out to look at the entire structure off of the 2009 low. So let's go ahead and do that because we haven't done that in quite a while. I think this counts best moving back to there, as we talked about last time. But I think this is a little bit too small of a degree for looking at such a larger time frame chart. That's why I have it kind of grayed out there. But we have our primary degree. So when I click on that circle, wave 1, you can see the 5 waves up off of the March 2009 low. And that's our primary wave 1. Our yellow fibs here are the measure of that 5 waves up as primary wave 1, projected off of the wave 2 low. So that gives us our 0.50, which is where our intermediate wave 1 of the primary 3 hit, and then a pullback in wave 2, a 5-wave move up for the parentheses wave 3 that hit the 123.6% extension, consolidated a nice ABC back to just under the 100, and then got another 5-wave up move that counts best complete into the September 2018 high as primary wave 3, then our big expanded flat for the primary wave 4 that had this large drop into the March 2020 low. And then off of that, we're looking for the rest of our 5th wave proportionate to this wave 1 and this wave 3. So we have here on this chart, I'm going to hide this for a minute. We have this fib measure. So a couple of things we can use for this larger degree. Either we can continue to use the yellow fibs, where we got to a 1764 and held back at a 1382. So we can say, well, we should at least get to a 200%. But in this case, our X wave inside of our 4th already hit a 200% extension, implying that this next move, that the underlying trend is still very, very bullish. As we can see, we're already heading past the 238.2%. So we can also use the next extension, the 2618 or the 2764. But these seem to, while they still seem to have some bearing in terms of the larger degree fibs, it seems like we're filling out a structure in our final 5th based on some other proportions. So that's when we're going to zoom in here, and we're going to take a look at, I'm going to bring back the fibs that we have here. So then we have our 5 wave up structure for the intermediate degree wave 1 inside of primary wave 5. Oh, this fib structure here, sorry, I'm getting ahead of myself a little bit. This is the 5 versus wave 1. So this is the fib extension, the same measure of wave 1 that the yellow fibs are projecting off of the primary wave 2 bottom. This is the same measure of that projected off the wave 4. So whereas the yellow fibs were initially comparing the size of the primary wave 3 to wave 1, these fibs here, this 5 versus 1 tool, is comparing the size of primary wave 5 to wave 1. So we know that we hit a 176.4% extension, but that we should expect a lot of extension in our primary 5th wave because of this expanded flat. And we can see that we're just now getting close to a 123.6% extension of that primary wave 5. But I don't think we're going to get all the way up there, because I do think that this is trying to complete closer to the region where we're in now, which was, as we talked about before, is the 100% extension of intermediate degree wave 3. But I do think longer term we can get closer to the 5800s, which is a 1618 extension based on of primary wave 5 relative to the primary wave 1. And that will take us up closer to maybe even 6,000, which is a 1786 in the intermediate degree fibs. But in our intermediate degree, we have our initial 5 waves up that looks best into the June high, as Garrett and I are counting, a corrective consolidation for the wave 2. I'm counting the intermediate parentheses wave 2 into the later June low, even though it's a higher low, because that seems to fit with the Rsp chart, the equal weight version of the S&P that we've talked about and we'll take a look at in a little bit more detail shortly. And then we have, playing very good Fibonacci pinball, an initial move up to between the 382 and the 0.50 for the minor degree wave 1, a consolidation, then 1, 2, 3, 4, and working on that 5th wave up, completing towards the 100% extension at the 4425 region, which plays perfect Fibonacci pinball. So we'll look at the ES chart and see how we can possibly still get further extension here. At one point, we did have this, if I go back to the sentiment stages here, you see this green note of the 3, and this green 3 here, and then the larger green 3 pushed out a little bit higher here up to this 1618 extension. And so that's where, instead of completing the 3 of parentheses 3 here, we're still stretching higher in this 3 of this 3 of this 3. And so that would get a similar consolidation. The reason why I haven't been harping on that as an alternate count is because when we look at the support region, whether it's this green 3 topping or this 3 topping, our support region for a 4th wave, whichever degree it is, whether it's the circle 4 or whether it is the minor degree wave 4, is going to be the same, roughly 4,000 region. As each day goes by, our 200-day moving average continues to rise. It's coming up through the 3950 region right now at 3947. So, I think it's pretty reasonable that we can hold in the low 4,000s for any 4th wave consolidation, but still haven't put in any kind of clear top yet. So now we're just into that resistance region where normal Fibonacci pinball says we should be on the lookout for some signs of forming a top. So that's why when we zoom in, we're looking at things more in terms of where's the next micro support for potential extension. And, can we count this move complete? I think that, on the other page, I had moved this circle wave 3 to here and was counting a smaller of the circle wave 5. I think either way, it's fine. It gets you to the same result where we're still at that same 100% extension for either of these wave 3s. And if this is going to extend, we want to see it hold a corrective consolidation from, this low. So this is another 5 waves up here, which could have completed the end of the 5ths of the 5ths that got us up to that 100% extension. Or it could be the start of a bigger breakout or more extension. So if it is the start of a bigger breakout or even more extension, then we want to see, maybe even this 43.65 level hold. But if this is a wave 1 and this is still part of a wave 2 retrace, we could get more of a drop down towards maybe the 43.40s. Under the 43.30s, it starts to get harder to consider this a 1-2 of any kind of immediate breakout, and starts to get a little bit too droopy to look for more immediate extension higher. And that might be the first indication that we are starting our wave 4 consolidation, again, that has, could easily hold a higher consolidation, whichever 4 it is. I would almost say that if we only get, an ABC into the 4100 region, could even be all of the smaller degree wave 4, but they could both have the exact same structure. I think at this point, probably holding a little bit above the 4,000 region is probably a little bit more likely. And it is even possible that this B wave makes a nominal higher high. We've seen lots and lots of those fourth wave B waves make a nominal higher high. In terms of, microstructure, I've been playing Leo's, VRP 350, and that has been for the most part selling bullish put spreads for things to continue to grind higher. So that's one way. That system has not yet flipped to selling call spreads. So that is one way of continuing to play for potential extension. The other thing that I've been looking at is the oh damn it, I wanted to go to name accounts there. Is just playing with the ES futures or using multiple contracts on the micro ES futures, because then you can more easily layer in and layer out for some scalping trades. So, every time there's a small 5 waves up and a 3-wave retrace, there's an opportunity there for a scalp, and just trading the smaller time frames as they come. But again, similar to the SPX, we have a little bit more room ahead to the exact 100% extension on the continuous contract. It's at 44.34. And again, this looks a little bit more like just, maybe it wasn't quite satisfied with this high that counted great from a subwave standpoint for all of the subwaves complete, and wanted to just get extension a little bit closer to that fib. Also have the blue line here is the same 100% extension, but for some reason it's not quite lining up with this blue fib here. Now I wanted to look at the microstructure on the NQ. Nope, not the sentiments. There, nope, that's not it. There we go. Here's the micro. Oh, so before we go to the microstructure, let's talk about the larger degree. Very similar in some ways to the larger, in some ways to the S&P, but I think it's harder to count the high in February of 2020 as a B wave or an X wave. And I think in the NASDAQ, that counts better as 1, 2, 3, 4, and a very extended fifth of this fifth to get to stretch the top of primary wave 3 all the way up there. But the same low counts as the primary wave 4. NASDAQ is much harder to count the, can't get 5 up really into the June high as easily, or if you do, the June low is really not conducive to counting as a larger parentheses 1, parentheses 2. It is hard to reliably count the move up into September because it is so high already above the primary wave 3 as just the wave 1 of the primary wave 5. And the red fibs here are the fib extensions for this cycle wave 3. And it does seem like the NASDAQ is much further along in the primary wave 5, in this case of a cycle wave 3. So Garrett and I count a smaller 1-2-1-2 start off of the March 2020 low for the NASDAQ. Then the September high is the minor degree wave 3 of the intermediate wave 3. And since the October low, we have been filling out, or the September low, I should say, we've been filling out this large ending diagonal as the minor degree wave 5 of parentheses wave 3. So we know in a diagonal, all of the subwaves should be ABC moves, and we can certainly get an ABC move up for wave 1 here, an A, B, C move up for the third, and an A, B, and a C wave completing for the fifth of that ending diagonal fifth wave. So now when we go to the smaller time frames, which I know it seems a little bit misleading that I have it labeled as big macro clean, but that was just the free, the cleanest tab that was available at the time to shift over to start looking at some micro count. So I'm going to zoom in here. So now we're just looking at the C wave of the circle wave 5 that we were looking at on the larger 4-hour chart from before. And inside that C wave, it is possible to count the purple diagonal subwave count. We have an ABC up for wave 1, a shallow wave 2, an ABC up for the wave 3, a pretty shallow wave 4, given that it's a diagonal, and are working on an A, B, and a C wave up for the 5th wave of that. So that's the extension potential, and I'm going to zoom in a little bit more on that extension potential for just that 5th wave for the NASDAQ to get closer to the 15,500, maybe even stretching all the way up towards the 16,000 region. And that's based on this being an A. In this whole structure, I'm going to go ahead and delete this because I think it does count better as the triangle of the A and then a B wave triangle, and then the start of a new C wave where the 100% extension takes us up to that 15,550. So that is predicated on holding support. Technically, this can all still be just wave 1 of this C wave, and so we could still get a wave 2 retrace, but I think anything under the 14,950 region starts to get worrisome. At that point, it could maybe drop to a deeper B wave, where instead of this being a triangle for the B, this is an A, this is a B wave, and then it gets a C wave down toward the 14,700s. But it starts to look more like maybe this did complete all of the parentheses wave 3, and then we are due for this larger ABC consolidation into the normal support regions that we would expect for a larger degree 4th wave, and that could take several months to play out. Certainly possible that we get an even higher high for the B wave again, or that this holds more as a running flat, but we can't look for those less normal patterns from the beginning. We have to say, the normal structure that we should see for a 4th wave looks like an ABC back towards maybe this 382 retrace of the 3rd, or we know that after a diagonal, a lot of times the 4th wave consolidation that'll come after that ending diagonal takes it back to the beginning region of that diagonal. We also know that a 4th wave at a larger degree will often tend towards the 4th wave of the 3rd of the prior 3rd. So that's this smaller degree 4th wave inside the parentheses 3. Or inside this wave 2. So we have a lot of confluence in this 12,000 to 11,500 region for support for that larger degree 4. Certainly if we do get more extension up towards the 15,550, then that can raise this up even closer to the 12,000 region as the 382 retrace. So that's the NASDAQ and the S&P. Let's take a look at the Russell and see, a very different look in some respects at a smaller time frame, but a lot of similarities at the larger degree. So the Russell, again, same primary wave 5 off of the March 2020 low. It very clearly looks like 5 waves up into the June high, counting an expanded flat into the September low for the parentheses wave 2. And we ran into resistance at that 100% extension for the parentheses wave 3 and have been consolidating since then as a 4th wave at minor degree. So when we zoom in, so we're trying to finish the wave 4. Ideally, it's going to hold right around the 2000 region if it does get a lower low. The 382 retrace is at 1998. And we also have the 100-day or the 200-day moving average coming up into the 2100s now. So a brief dip under that, if it is going to get a lower low, would still be ideal to hold support in that 2000 region. And then we're going to be targeting just shy of 2800 is the 1382 extension for that wave, parentheses wave 3 for the minor degree 5th of that. When we zoom in, we can see that the structure off of that March top initially looked like maybe it was enough for this to be a 1-2 of an ending diagonal getting further extension, or it was trying to fill out as a triangle. it broke the top of the triangle and looks more like this ABC up for a B wave, and so far does not have 5 waves down in the corresponding C wave. So an A, B, and we should get 5 waves down in a C wave. This could be all of the wave 4, but it would have to count as a WX and then even a WXY for a Y wave, which is a very complex pattern. So this can still be a 4th wave in the C of 4, trying to get an ABC to one more low. Had the potential, this was the ideal top for a 4th wave. It couldn't hold that yellow line and got nominally higher. This can be an alt ABC up for that 4th, and so it can retry an ABC move down to at least a nominal new low under 2100, maybe not reaching all the way down here towards the 1998 region for one more low in that 4th. But there is a chart that I wanted to take a look at with you guys that I posted it a little bit in stock waves. So related to our Russell chart is the Iwm To Spy Ratio. We can see from here, from March 2020, was the first kind of significant bottom that seemed to hold in this ratio. If we zoom out here, we can see that it was in a pretty big downtrend for a while. And since the 2013 peak that it made in February 2014, we saw some pretty big moves down and then an ABC move up to the upside. So far since March, it looks like it's filling out an ABC retrace. It's not the cleanest chart because it's a ratio chart. It moves in very tiny degree ticks. I could probably actually edit this and give it one more decimal point. Yeah, let's do that. It gives us a little bit better price structure. But anyway, we still have an ABC move up and working on filling out an ABC move down. If we go ahead and add our A, B, and it looks like we can still get a C wave lower. That seems to fit very nicely with the structure that we're looking at in that Russell chart, the RTY, allowing for one more low in the Russell and maybe starting to see maybe a little bit of extension further in the S&P, but then set for another reversal here. And it's interesting that a measured move targeting the 67 to 70 region, 0.67 to 70 region in this ratio would actually line up pretty well with our target for the Russell. For the Russell to head towards its 1382 extension here at 2800 region, and for the S&P to fill out that wave 4 retrace towards the 4000 region as a larger ABC. So those corresponding levels using the Iwm SPY would roughly put that ratio right around 0.67 to 0.70. So it does seem like there's some good potential for those to kind of flip-flop and rotate, where the Russell that's been consolidating down and sideways since March is ready to turn around and put in a more significant bottom, whereas the markets that have continued higher, reaching their targeted top for that same wave 3 that the Russell hit in March, now need to consolidate in their 4th waves. Lastly, in terms of index charts, well, I guess not last. Let's take a look at the Dow. The Dow probably still is the major index that has the most potential to be a more nested bullish count still in my opinion, or at least get further extension. We can move our 3 of this 3 back to where we had it before. So the parentheses 3 and parentheses 4, And this could be a 1-2 start and an AB of the 3 for a more extended parentheses wave 5 of this 3. And is even possible that this was all of this wave 2, and maybe we're working on a larger leading diagonal for this wave 1, or even potential that this is a 1-2 and another 1-2 inside the green 3 in the Dow. But all of that is predicated on it holding more immediate support, really the 34,250 region, or 34,200s, are ideal support for any immediate bullish structure. If it fails to hold that level or can't seem to get over 35,129 on the next try, then I think it's going to need to just move sideways a little bit more. It might end up looking a lot like the Russell chart did from the March top, where it really doesn't end up getting much lower than the June low, but it just kind of moves sideways and consolidates as this fourth wave from a slightly more muted fifth of that third. So now, before we go on to some of the commodities, I do want to take a look at the RSP chart, because I do think it is, like the Russell, I think it is very, very helpful to look at something that has less skew from the weightings of just a few disproportionate names. So very similar structure, to all of the other major indexes, as it should. The larger degree, with it starting a primary wave 5 off of that March 2020 low. The 5 waves up into the June high is far more pronounced as being the top of the parentheses wave 1 in the equal weight version of the S&P. Again, as I mentioned when we were talking about the S&P, why I count the later June quote-unquote low, even though it's not a lower low in the S&P, is because it was a lower low as an A, B, C retrace for that wave 2 in the RSP. Then we can count 5 waves up into September, very similar to the IWM or the Russell for the wave 1 of parentheses wave 3, and expanded flat into the October low in this case for the wave 2. And then our third wave hit the 156 region. Still have a little bit of room to try and extend more into that yellow box. But as we've talked about, 15603 is the exact 100% extension of intermediate degree wave 3. And so that is a very reasonable spot for our third of parentheses wave 3 to top. So we can get further extension. Immediate support, I think, is probably 150, 150. It is possible that this is just wave 1 of an even bigger extension, and that's what this green 3 is, although I don't think it can get all the way up to 174 from here. But there is no need for it to get further extension at this point. So it can very easily count as all of this 3. So if we start to break under the 149 region, that starts to look a little bit more droopy in favor of the start of this ABC wave 4 back towards the mid to low 135 to 133 region is the ideal support for wave 4 of 3, and then maybe even 139 would be fine to hold. That's the 0.764. So going from the 100 back to the 764 would be a normal consolidation as well. It doesn't have to get all the way to the 382 retrace of this 3. And then our normal target would be 187 longer term probably into next year as 5 waves up for that 5th wave of 3, getting to the 138.2% extension. All right, before we move on, are there any other specific questions regarding the index charts? All right, if they do pop up, certainly type them into the questions box or into one of the threads, and I'll try and go back to it. But in the meantime, let's take a look at oil. To remember which I have, it's easier for me to keep one window for the go-to meeting and change the chart that's shown on it, rather than trying to hop GoToMeeting or GoToWebinar around to different windows on my desktop array. But I keep a tab open, or I keep a window open in my motive wave for oil that's on this macro clean tab, which is what I've been following with my smaller degree charts. So I don't have to find which is the tab that I've been using. But when we do these webinars, I have to hunt for it. We've talked about before how this might have gotten a little bit confused, that it was playing out as an impulse. And technically we did get overlap as the fourth wave into the top of the wave 1 territory. We could get creative in the way that we count 5 up for wave 1 and reduce the incidence of overlap there. Or we could say that this is really an ABC up for wave 1, an ABC for wave 3, and this fifth wave should be an ABC move. But if it didn't forget and it just got, we have to sometimes make allowances for futures commodities that sometimes get a little bit exaggerated final moves in our HFT driven trading days. We are holding between a 618 and a 764 retrace of this initial move that does look like 5 waves up off of the July low, which is either a 1-2 of a more extended fifth, or it could be an A and a B of this fifth wave if this did decide to just morph to an ending diagonal for the parentheses wave 5. So looking for another move up towards the 80 to 85 region in oil, as long as it can hold these 67s. Technically, it doesn't invalidate until it falls under 64.60, but it will look much better if it can hold the 67 region here. Mohammed, you're asking about oil? Is it possible the wave 1 is actually a B wave? This wave 1 is a B wave? I mean, I had considered that this was going to fill out as a B wave, maybe to here, and possibly turn down, and that's what this alt wave 4 was. But then it held a small consolidation and pushed higher for the third. This smaller degree wave 1, it looks too much like 5 up to be a B wave. I mean, if the low breaks, then that'll be what we're left with to count it as, because it'll have been an ABC move down and then a move up that didn't make a higher high and then broke that low. So that would look like an A and a B and maybe a C wave down, filling out towards the lower 60s. But from right here, I think we have to give it the benefit of the doubt that this is 1, 2, 3, 4, and 5 waves up. So until it breaks, we have to treat this as a corrective retrace into our Fib support region. It's not the cleanest ABC, but until it breaks 67, I don't think we should really worry. All right, let's take a look at natural gas. Oh wait, there's a question. Freedep asks, are we expecting the SPY to correct in the next few weeks? I think it'll take a month or two at least to fill out that fourth wave, and we can still extend higher in the short term, holding those high levels of support. The 4330s that I mentioned, haven't shown any clear sign of a top yet. The only potential top that we had was a couple weeks ago as an initial move down, and the potential to the bounce we were looking, that initial drop down into the 19th of July. And then we were looking for a bounce off of that 4230 region in the S&P up to the 4330 to 4350 region. Once it pivoted over that 4350 region and didn't take that opportunity to start a small C wave down, that lost its short-term opportunity at holding a top, and so put us into extension mode. So now we need some other clear break of support to restart the potential path for that ABC for the fourth wave. Natural gas, I'm following this as a larger diagonal. I think we're coming into resistance for the top of the A wave of the parentheses wave 3 of that diagonal. We are right at the 0.618 extension of the third, which is a normal spot for the A to top. But I think we can get a little bit more of a 4.5 closer to 460s. So this could be an A and a B, come down to about 380, 379 as the parentheses wave 4, and then get that fifth wave up towards 447, 460 to top the A wave. And then our support for a B wave from there is going to look at like the mid to low threes. All right, let's move on to, that was black gold. Let's go look at regular gold. Regular gold, we're looking for this larger primary degree wave 5 off of the March low. So we have, you have to squeeze in 5 waves up here. So Garrett went ahead and he's just counting this as an A, B, and a C wave up for wave 1, where the entire primary wave 5 can be a diagonal. So that means instead of getting 1, 2, 3, 4, 5 up for this third, it should get an A, B, and C wave up. So basically the third would be complete here where I have a minor degree wave 3. But the structure that we're looking at off of the more recent June low should be the same in terms of the start of the wave 1 of parentheses 3, or we'll go ahead and add a blue A wave as though it's Garrett's diagonal. So the A wave and then the B wave would be about the same as our wave 2. And then from there, the C wave would be about the same as the third, but then that would just top the parentheses wave 3 instead of getting a minor degree 4-5 from there. We had a pretty good looking start to the possible wave 1 of this green parentheses wave 3 this morning. Posted about that in the mining stock service. We've been looking for this low to hold and for that 3 to start, but posted another update that we were getting close to, that this 1837 region was the pivot, but that was the main resistance for a wave 1 to top and to get a wave 2 retrace. This drop was harsher than we wanted to see for a wave 2 retrace, so it does look like we just need to move our green wave 2 over, and it's a wider flat, and this is a yellow A, B, and a C wave down. We do have, if we zoom in a little bit more on the micro, we have a new possible 5 up and working on holding 3 down, maybe even a nano 1-2 off of that. So can be trying to restart the the wave 1 of this parentheses green wave 3, which should take it back up to 1830 region. And then this third should take us to about 1855. Fourth wave should hold 1845 region and then take it on up towards 1874. That would be the ideal path for the green wave 3. But we're looking to fill out more of a 5-wave structure for wave 1. If it is possible that the A wave could complete here as an ABC up. But from right here, holding the 1790s, we should see 5 waves up towards the 1890s. Sorry, the 1790s. We should see 5 waves up towards the 1890s, 1900 region, at the very least as a C or a third wave here. Silver started to improve quite a bit this morning. The drop, the move up this morning counted better as a 5th wave up of this small wave 1 inside of wave 1 of our green wave 3 of the parentheses wave 5 that started back here in March. So the drop that was very harsh in gold for the alt yellow C wave of the parentheses green 2 can just count as part of the green 2 here in silver. So we do want to see it hold the 2490s and get 3, 4, 5 up for that wave 1, targeting the 2850 to 2870 region. Moving on to GDX. GDX, for the most part, recently looks most similar to silver. Off of this March low, counts as 5 waves up, a deeper wave 2 to the 764, and like silver, it looks like the high this morning. Completed 5 up for the small wave 1, pulling back in a wave 2, trying to get 5 waves up for this wave 1 of the 3 of this larger C wave. So if I zoom out here, we can see the structure. We're counting a larger diagonal, where in this primary wave 3, we have an A, B, and C wave structure at the parenthesis intermediate degree. The alternate that I have on this chart is that instead of this being all of the 1, 2 and working on 1, 2 of the 3 in an impulse, we could get an A, B, and starting a C wave up for a larger wave 1, where the parentheses wave C is an ending diagonal. But you can see there's a lot of overlap in terms of what that structure should be. Instead of a 1, 2 of the third, this would be the C wave of 1 in the wave 2. And instead of the 3, 4, 5 of the 3, we'd get an A, B, and a C wave up to the 3. So it just kind of skews it a little bit, but for the most part, that same ebb and flow up towards the 70 region is going to be ideal. If we cannot hold a corrective retrace for that small green 2, then it puts us at risk of dropping down towards the 28 region next as a deeper yellow B wave. But so far, most of our charts, there are some charts that have already been getting their version of this Alt B, but most of them are holding structures off of the March and off of the more recent lows as the start of this more bullish setup. There was a request to take a look at copper. We can do that. We can also look at platinum. That's one that we've been following very closely. Garrett and I are looking at copper as having topped in an intermediate degree wave 3 back here in May. And it looks like it's kind of ahead of the NASDAQ and the S&P if you're looking at copper as maybe a proxy for equities in general. It looks like an A-B structure and starting a C wave of that wave 4 that is targeting the 3.7 region ideally. We only have 3 waves down so far, so either this is completing all of wave 1 and the C wave is going to be an ending diagonal down, where this would be an ABC move for the 3, probably you get a higher bounce for the 4, it might overlap, it might not, and then an ABC move down for the 5th, or this is still just 1, 2, 3, and we need a 4 and a 5 and a little bit more of a wave 1, and then it fills out, maybe getting a little bit deeper as just a regular impulse down. That's really my preference. So we get a little bounce here is a parentheses 4, parentheses 5, then it bounces a wave 2, then copper can start to drop more. Robert, I can't post it as soon as it's done. The recording for the webinar first has to convert from the GoToMeeting format into something that we can upload to the site or to YouTube, and then those get posted. So for an hour-long webinar, it usually takes about an hour or so for it to convert, and then it takes longer to upload. So that's why there's a delay and things don't get uploaded until later in the evening. Also, if it just happens to finish and I'm in the middle of helping Shayna put kids to bed, then I have to wait until that's over as well. All right, let's take a quick look at platinum. And we're going to ignore palladium because I hate it. Platinum, I think, is filling out. We actually do have a nominal new low now. Wait, do we? Yeah, we have a nominal new low. So we're looking at the potential for this to have held the 50% retrace here as all of the B wave in our diagonal parentheses wave 3. But it had to count as a WXY into the June low, and we didn't get anything clearly definitive as a start to the C wave off of that. We were limited to this being part of a leading diagonal, or maybe even part of wave 1 of an ending diagonal if this was the start of that move. And noted in the mining stock service, a couple weeks ago already, that it looked very corrective and like we were at risk of this being 1, 2, 3, 4, and getting a fifth wave down of this yellow C wave, targeting the 618 retrace for B at 992.50. So it doesn't have to hit that 618 retrace at 992.50. We do have a nominal lower low, so technically 5 waves down for the C wave can be complete, but there certainly is room for that to stretch a little bit more. We do have a lot of divergence on some different time frames, so we're on the market for a micro 5 up, 3 down to start to signify a bottom. But until then, certainly leaving room for this to stretch closer to that exact 61.8% fib at 992.50 for platinum. Then from there, we're going to be looking for a turn up as the C wave of the wave 3. The measured move for the C wave is 1626, but from a little bit lower. But ideally, we have more confluence in the 1750 to 1850, even 1900 region for platinum for that C of 3 to top. All right, let's take a look at bonds. We'll focus mostly just on the 30-year because I think it matters a little bit more, but we will peek at the 10-year and just know that TLT kind of splits the difference there. So maybe the tail, TLT is the tail, wags the dogs and forces movement because it is such a large ETF. Maybe it does force a movement in the actual bond futures market, but we'll kind of track each of these charts on their own for the time being. At the larger degrees, we are either still looking for an attempt at one more low as the fifth wave. I'll go ahead and add the subwave ABC structure here. So either in our C wave, we can still be a fourth of a 1, 2, 3, 4, and try for a fifth wave down to a lower low. But it is certainly possible you hit a 618 retrace. It is possible this is a WX and an ABC for a Y wave, and we're trying to fill out 5 waves up for wave 1 of this larger C of the cycle wave 5 here. So we're at an interesting spot at the smaller time frame where we're starting to creep a little bit past the resistance that we wanted to see hold for our fourth wave in the orange count for this to get one more low. But it is still a risk. We do not yet have 5 up. We don't yet have 5 up and then holding 3 waves down as a corrective retrace to signify that this was all of that B wave. If we're going to hold a fourth, a green 4 should hold the 160s, and then a fifth wave up should target the 170s, maybe 172 region, and then we should get a wave 2 from there back towards the 160s. So I don't think that you need to be worried, particularly with the structure that we have here of all of a sudden the bonds ripping to the upside and never looking back. If they are more than a fourth wave, which it's starting to hint that it very much might be, this 3, 4, and 5 of wave 1, it still needs that fourth wave consolidation. It's going to need a fifth wave up, and then it's going to need a wave 2 consolidation to confirm a bottom and the start of a longer term trend to the upside in bonds, or a bigger move down in price, or a bigger move down in yields. Now, looking at the TY, which is the 10-year, US is like the big 30-year US Treasury bond. TY, I guess, stands for 10-year. That's just the way that IQ feed does the coding. The same structure there. We only have 3 waves up so far. This higher high can easily just count as a better fifth wave up of the C of 4. So, and we stayed so far, we stayed under that 618 retrace of the orange 3. So there is still a risk in the 10-year of trying to get a lower low as the fifth wave of the parentheses wave C. But if we look at the larger time frame, similar structure here. We did get to a 382 retrace, so technically that's enough to count all of the B wave. But again, even more of a muted move up so far does not look very convincing as part of wave one yet in the 10-year. So I think the 10-year is still more at risk of attempting that final drop than the 30-year is. Then if we look at TLT is past our normal resistance that we wanted to see hold. So TLT, while this looks a little bit more constructive as starting to be more than 4, this first move off the low was very clearly only 3 waves. So that means that if this is part of a wave 1 in TLT, this is an ABC up for wave 1 of 1, wave 2, an A, B, and a C wave up for wave 3 of 1, needing a 4th, then a 5th wave up that should be an ABC move up towards maybe that 160 region, which would be that parentheses green wave 1. And then from there, similar to the US, the 30-year bond chart, it would need a wave 2 retrace back to the mid 140s. So if we clearly see it holding a 4th wave retrace in the 140 region, 141, 142, this green wave 4, then maybe there's a good scalp opportunity to say this doesn't look like it's starting that orange 5th wave down. This looks more like it's a constructive retrace setting up for a high, and then you could scalp for that 5th wave up. All right, let's look at EEM, and then we'll take a quick look at the dollar before we finish. I think EEM is kind of in between platinum and the Russell. I think it's part of a larger diagonal in this larger 3rd wave, primary degree 3rd wave. And we had the potential to hold in the 50s and get one more high for the A wave of our 3rd, but instead it looks like we're dropping in the B wave, which at this point can still be a 4th here, very similar to the purple C wave that we were looking at on the Russell. So getting a 5th wave down of the C wave to complete the parentheses B wave a little bit above the ideal fib target region. But I think given the larger bullish context for a 3rd wave that we're trying to get up into the 84, 85 region, holding the 40s, the 45 region for a more shallow B wave, and then heading up toward the 84 to 90 region as that C wave is a little bit more ideal. But I would be on the lookout for the move off of this low to be only an ABC move up, and that might be an alt yellow B wave of a deeper B wave. But I don't think it changes. I don't think this changes the structure that we're looking for the potential for one more low into the 48 region now. And that is a good opportunity to look for a micro setup to jump in for a long. And then if that turns out to only get 3 waves up into the 54 to 56 region as resistance, that's where you trim some profits and or hedge to look for that possible deeper B wave drop, which at the next fib level for the B wave puts it down closer to 42. All right, let's look at the dollar and then we'll stop there. The dollar, treating this as 5 waves down for a larger A wave, as we've talked about pretty recently, and setting up for a measured move down. This hasn't actually gotten a higher high than our red B wave here, but this does look more like 5 waves up. It could be all of the flat, the A, B, and C wave flat here. It does look like possible 5 waves up, but I think we can allow this room to try and get one more 5th wave up closer to the 94 region, 94 to 94.50. If it breaks 91.70s, though, that will start to look more like a top, like this move top right here. So I think what I'll do, put this over here as an alt to get that higher high if it can hold this 91.70 region. But that's going to be your first indication that we might be starting wave one of this measured move down. This red arrow is the measured move of this A wave. So treating that as a C wave down. The fifth wave, oh, there it is. There's the fifth. So that would be 1, 2, 3, 4, 5 waves down for that measured move. All right. Any other questions before we hold it there? All right. Thank you, everybody. Have a wonderful evening, and I'll get this uploaded for you as soon as I can.